And a nice positive showing on the JSE All Share today, up 1 3/4%. Almost obviously, we are taking our cue from international markets. But where to from here, Nick?
Yeah, another positive day. It was a little bit unexpected, I would say. Really strong day once again. The market seemed to be hovering around the 25,000 point level, and it looks like they don't want to go down. So I think never argue with the market. The market really wants to go up, and I think we're getting to a situation at the moment where we're really starting to see sentiment turn. Everybody was incredibly negative 4 months ago, now everybody's incredibly positive. And on the sidelines, there's a hell of a lot of money lying around there, and as interest rates come down, that money starts to become a little bit itchy with regards to people's fingers at the moment touching it, and they want to put that in the market. And they want to put in the market because they're seeing the market keeps on going up, and they don't want to miss that out. So I think it's a largely sentiment-driven rally at the moment, which is a little bit scary from our point of view because we don't feel that the fundamentals back up current market movements. So we're kind of going against our you know, what we taught at school and what we taught at varsity and so on, and what we get taught by our colleagues. And we're now looking at the psychology of the market, and the reality is the market wants to continue going up. So climb in and enjoy the ride at the moment.
Standard Bank today trading 95 Rand 51, down ever so slightly, and a very candid interview with Jacko Marie just a moment ago. There's caution all over that outlook going forward.
No, exactly. You know my feeling on banks. I think I've mentioned it, I think last week to Chris or something like that. Yeah, Standard Bank at 95 Rand we feel generally is overpriced. You listen to the CEO, he's also incredibly cautious. I feel that there are certain sectors that are certainly showing a bottoming, and within the next few years will certainly turn around quite nicely. I think banks are going to be lagging that a little bit longer. So I would not be in the financial sector just yet. I would be selling my banking stocks. Incidentally enough, Standard Bank didn't have such bad results. I mean, compared to ABSA,
pretty much in line
result.
with guidance.
Yes, exactly.
You know, I mean, at the end of the day.
So we all know what it's like. It's not good. I just think you can do better. Your money can work harder, better at the moment.
But the one highlight from that interview is that they do see opportunities in this tough environment. They're not holding back on their capex. I mean, Jacko mentioning their IT spend increasing. They are taking advantage of the current downturn. So
it takes guts to do that.
Positioning themselves for a trajectory.
And they will reap the benefits from it, most definitely. I mean, you can see that with Billiton as well. They've still got the capital expenditure on the go. It's not a problem at all. As long as you're not sitting with a large amount of debt, you can do that. You know, and yes, it will certainly pay dividend for Standard Bank in the more medium to longer term. But as it stands in the shorter term, I would still not be holding that stock at current levels.
Even in light of the interest rate cut today? Even
in light of the interest rate cut today.
Do you expect another interest rate cut in the local front?
I was actually surprised to see the 0.5% cut. I don't think so. I think at 10.5 on prime, we might stick around there for quite some time. Don't get me wrong, I'd love to see another half a percent cut, and markets will certainly react positively towards that. But at the moment, we must still understand that you know, we must keep a very fine point on that inflation figure, I think. Look, I think the reason why we saw this 0.5% was our retail sales were not good at all, and then I think was the straw that broke the camel's back that made the MPC's decision to cut it by 0.5%. I think we must still be very wary of where inflation is going and how electricity tariffs and wage increases is going to affect that currently.
Did you see the trading update out of WBHO?
I did. I glanced at it ever so briefly. I was more excited. I think Sorour came out with something late this afternoon. Their trading update. That's a company I look at. Obviously, it's a resource business. And then City Lodge's results I glanced at as well.
I'm going to be speaking to Hans Endele
That'll
later.
be interesting to see what he says. Look, they weren't through the roof, and dividend was slightly down. But what I really like is occupancy, in my opinion, is still very high at about 77% in a very tough environment. And I like the idea that they're still expanding as well. I mean, I think they're building about 9 new hotels. They're going to be finished by 2010. So I think City Lodge is certainly something to watch. It is a mid-cap. It's not very big. But that's something that we like. And Sorour's trading update was very good, in my opinion.